Welcome to Hong Kong Brief. The content of the briefing includes: Who wants to catch Jack Ma's falling knife? China tech optimism rekindled amid slowly thawing China-US ties. Xi's big week ends with rare wins on US ties, Taiwan, economy. Alibaba shares plunge after reversing spin-off plan of cloud unit. Tim Hortons enters Singapore's crowded coffee shop scene. Who wants to catch Jack Ma's falling knife? Bloomberg. Alibaba has suspended plans to spin off its cloud operations and paused the listing of its supermarket unit, causing its stock to drop and wiping $20 billion off the company's market value. Founder Jack Ma's family trust also plans to sell 10 million shares within the next week. The company is undergoing a major business revamp and has been replacing much of its C-suite, while also needing to spend billions of dollars on new fields such as generative AI. Investors are concerned about who will be held accountable for the company's future spending. China tech optimism rekindled amid slowly thawing China-US ties. Bloomberg. Chinese tech companies Baidu, Xiaomi, and Kuaishou Technology are set to report earnings following talks between Chinese President Xi Jinping and US President Joe Biden. The talks focused on cooperation in fields such as artificial intelligence, AI, with the US expressing concerns about China's use of AI for military purposes. Baidu and Kuaishou Technology face economic challenges, while Xiaomi's smartphone business has stabilized. Meanwhile, China is expected to face debt and deflation challenges in 2022. Xiaomi's sales are expected to be little changed, Baidu's revenue is projected to increase, and Kuaishou Technology's performance is uncertain. Xi's big week ends with rare wins on US ties, Taiwan, economy. Bloomberg. Chinese President Xi Jinping has concluded his visit to the US on a positive note, following a week of good news for Beijing. During his visit, Xi met with US President Joe Biden and both leaders agreed to better manage tensions and work towards a more friendly relationship. This will reduce the risk of a crisis that could raise military tensions at a time when Xi is dealing with a major property market slump and a shakeup in senior leadership positions. Xi's trip also included a speech at the Asia-Pacific Economic Cooperation Forum and a warm welcome from some of the most important US business leaders. Additionally, a new political alignment in Taiwan has boosted the chances of a China-friendly leader taking power in the January election. This week's events have given China's economy a boost, with data suggesting that the country is putting its recent difficulties behind it. However, this positive stretch may be short-lived, as previous détentes have quickly been derailed. Nonetheless, it is a significant development for Xi, who is facing corruption concerns and faltering domestic confidence in his economy. Alibaba shares plunge after reversing spin-off plan of cloud unit. Nikkei Asia. Chinese e-commerce giant Alibaba has scrapped plans to spin off its cloud unit. The company said tougher US restrictions on chip technology had created uncertainty around the prospects of the Cloud Intelligence Group. As a result, Alibaba said a full spin-off would not achieve the intended effect of shareholder value enhancement. The company will instead focus on developing a sustainable growth model for the unit in fluid circumstances. The company also put an initial public offering of its Freshippo groceries business on hold, citing the need to evaluate market conditions and other factors that would contribute to a successful transaction. Last month, the US tightened its export controls on artificial intelligence chips, including NVIDIA's A800 and H800 models, by requiring that companies apply for licenses if they want to ship cutting-edge AI chips to clients in China and other designated markets. Tim Hortons enters Singapore's crowded coffee shop scene. Bloomberg. Tim Hortons has opened its first outlet in Singapore, with plans to open 3 more in the coming months. The move is part of the coffee chain's expansion into Southeast Asia, with plans to open in Malaysia and Indonesia in the next year. Tim Hortons is tapping into the rising affluence of Asian consumers and the booming tea and coffee supply chains in the region. The chain has also been expanding in China, where it currently has 700 stores and plans to have 2,750 by 2026. Tim Hortons is owned by Restaurant Brands International, which also owns Burger King and Popeyes. China is sailing its way through a record year of debt sales. Bloomberg. Chinese bond traders are concerned about how the government will manage the sale of 1.5 trillion Chinese yuan, $207 billion, worth of bonds before the end of the year. The People's Bank of China, PBOC, is expected to facilitate the issuance by injecting liquidity into the market. The PBOC has cut interest rates twice this year to help manage the issuance of bonds, and expectations are diminishing that it will cut commercial lenders' reserve requirements again in the near term. The bond market has so far managed the high volume of bond sales, with yields on China's 10-year government debt at 2.66%, well below this year's high of 2.93% in January. China's Wuxi XDC to debut in Hong Kong after IPO priced at top. Bloomberg. Wuxi XDC Cayman, a Chinese maker of drugs used in cancer treatments, will start trading in Hong Kong after an initial public offering, IPO, that raised $471 million. The IPO was priced at the top of the marketed range, which is a rare case of strong demand for a listing in Hong Kong this year. The tranche restricted to individuals saw 50 times higher demand than the number of shares available, triggering a clawback mechanism that made a portion of the shares available to retail investors. Wuxi XDC plans to use most of the funds raised to construct new facilities in Singapore and grow production capacity in China. Asia stocks fall as Alibaba sinks, oil at July low, markets wrap. Yahoo! Asian stocks fell on Friday with Alibaba Group holding limited leading Chinese companies lower after the company walked back plans to spin off and list its $11 billion cloud business. The MSCI Asia Pacific Index was down but still on pace for a weekly gain of about 3%. China's Li Auto says to start mass production of its first EV in February. Reuters. Chinese automaker Li Auto has announced that it will begin mass production of its first pure electric car, the Mega Multi-Purpose Vehicle, in early February 2024. The company has also started taking pre-orders for the new model, which is estimated to be priced under 600,000 yuan, $82,826.02. Delivery of the vehicle will begin in mid-February. More healthcare stocks, Samsonite may join Hong Kong's stock benchmark. Bloomberg. Hong Kong's Hang Seng Index is expected to add more healthcare companies and smaller profitable stocks in its quarterly review this week, according to analysts. Bloomberg Intelligence sees scope for higher representation of biopharma companies such as Zai Lab, GenScript Biotech and Innovent Biologics on the 80-member gauge. The reshuffle comes as the index slowly expands to include 100 members and aims for a more balanced representation of Hong Kong's stock market. Holiday gift books, reading for children. Wall Street Journal. The New York Times has published a list of illustrated books that make for great Christmas gifts. The list is said to be for those who like books that are a little out of the ordinary. The New York Times suggests that gift books should be larger in size, intriguing, distinctly illustrated, and appeal to nostalgia. The list includes books such as Around the Year, D'Aulaire's Book of Norse Myths, The Magicians, Transported, 50 Vehicles That Changed the World, and Illustrator's Sketchbooks. Faces of Sangsingdui, Bronze Age relics shed light on mysterious ancient kingdom. Yahoo! An exhibition of ancient Chinese artifacts is being used to support the Chinese government's vision of national identity, according to analysts. The objects on display in Hong Kong date back over 3,000 years and were discovered at the Sangsingdui site on China's Chengdu Plain. The site represents the largest and oldest left by the Shu Kingdom, a civilization that emerged in the Sichuan Basin during the Bronze Age. It is thought the kingdom developed independently of the Yellow River Valley societies traditionally seen as the cradle of Chinese civilization. The objects on display include bronze sculptures predating the Terracotta Army by around 1,000 years. The Chinese government has long promoted Sangsingdui as proof of the country's long, uninterrupted history. However, some analysts claim the exhibition is an attempt to support the Communist Party's narrative that all people living within the country's borders are inherently Chinese, and that seeking autonomy or independence is taboo. Chip woes, the Bloomberg Open Asia edition. Bloomberg. Apple's plans to replace Qualcomm's iPhone modem chip are facing delays and may not be released until at least the end of 2025 or early 2026. Alibaba has cancelled the spin-off of its cloud business due to US chip curbs, causing its shares to tumble. The US and Europe are pushing for the deployment of a UN peacekeeping force in Gaza after the recent conflict, putting pressure on Israel to end its military operation. Amazon will soon start selling Hyundai vehicles directly through its website, allowing customers to pick up the vehicle or have it delivered. Singapore's fintech will struggle to find talent. Bloomberg. Singaporean startups are facing a funding crunch and uncertain growth prospects, leading to a decline in hiring in the city's fintech sector. However, the situation may not be as bad as it seems, as rival cities such as Hong Kong and Abu Dhabi are hungry for qualified professionals, making Singapore's immigration hurdles less onerous. Hong Kong's Top Talent Pass program, which offers a 24-month visa to graduates of prestigious universities, has been successful in attracting talent and reversing its brain drain. Singapore cannot afford to slim down its fintech workforce when Hong Kong is expanding, and the city needs to attract more professionals to stay competitive in the industry. Hey there, folks! It's your favorite observer from the 6 Degrees World, Dr. Six, here to bring you the latest news and analysis. Let's dive right in. Alibaba's recent decisions to suspend plans for a cloud spin-off and pause the listing of its supermarket unit have caused quite a stir. The company's stock took a hit, wiping $20 billion off its market value. Investors are concerned about who will be held accountable for the company's future spending. It seems like catching Jack Ma's falling knife is not something many people want to do. On the bright side, Chinese tech companies Baidu, Xiaomi, and Kuaishou Technology are set to report earnings following talks between Chinese President Xi Jinping and US President Joe Biden. The talks focused on cooperation in fields such as artificial intelligence, and it seems that the China-US tech ties are slowly thawing. This could be good news for these companies, especially as China is expected to face debt and deflation challenges in 2022. Speaking of President Xi Jinping, he recently concluded his visit to the US on a positive note. He met with President Biden, and both leaders agreed to better manage tensions and work towards a more friendly relationship. This is a significant development, especially considering the major challenges Xi is facing at home, including a property market slump and a shakeup in senior leadership positions. Additionally, a new political alignment in Taiwan has boosted the chances of a China-friendly leader taking power in the upcoming election. All in all, it's been a good week for President Xi and China's economy. In other news, Tim Hortons, the famous Canadian coffee chain, has made its debut in Singapore, tapping into the rising affluence of Asian consumers. It's expanding its presence in Southeast Asia and China, where it plans to have a whopping 2,750 stores by 2026. Looks like Timbits are becoming a global phenomenon. Moving on to the financial world, Chinese bond traders are concerned about how the government will manage the sale of a massive amount of bonds before the end of the year. The People's Bank of China is expected to inject liquidity into the market to facilitate the issuance. Let's hope they don't drown in all that debt. And finally, Li Auto, a Chinese automaker, has announced that it will start mass production of its first pure electric car in early February 2024. The company is taking pre-orders for the vehicle, which is estimated to be priced under 600,000 yuan. It seems like the electric vehicle revolution is in full swing. That's all the news for today, folks. It's been a wild ride in the world of finance and beyond. Remember, investing in Chinese companies can be like catching Jack Ma's falling knife, so proceed with caution. As always, I'm eager to hear your thoughts and answer any questions you may have. So, what's on your mind? Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.